Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, June 3rd. Now we hit the month, beginning of summer here, and we got a bit of economic news releases scheduled for this week. Unfortunately, as I mentioned last week, I will only be here up until tomorrow. I will be going out of town and won't have access to be able to create these videos for you. So my apologies. So tomorrow's video will be the last for this week for me, even though we do have important economic week this week. But we'll start with what we got going on today, and that is the market PMI for the month of May. We had a 51.9% reading back in April, and we figured well, there was no forecast for this one, but it actually went up to 52.3, so a better number than we, so improvement basically is what we had there. And then we also had the ISM for the month of May. Now, we had a 50.7% for the month of April. We figured it kind of have a slight increase to 51%, and it actually dropped down to 49. So manufacturing didn't fare as well back in May, and it actually showed some contraction. So unfortunately for that, numbers aren't looking as well. And then we also have a kind of a minor one here, but it's construction spending for the month of April. So back in March, we had a negative 0.8% increase in the spending. We figured increase up to 1%, and it went up a little bit up to 0.4%. So not as big of a swing as they had anticipated as well. So let's go ahead and jump over to the headline news here, and we have the stock market's a little mixed. The Dow is currently up a little bit after beating on Friday, dropping 200 basis points or 200 points. But it did. All the markets or indexes on the stock market did close out the month of May on a high note. So, on this, for stock market wise, that was decent. A little bit of information came out about Asia, where the Asian markets were kind of not faring so well after China's PMI indicates some slowdown or slower growth heading forward. So there's some concerns about that. Obviously, with China the economy that they hold slowing down. So we'll go ahead and jump over the bond market, take a look and see what interest rates are doing. So as you saw last Friday, that big red tail or that red candle, second one over, we had this long tail. We actually worsened quite a bit. It was like about 90 basis point drop. It was almost like 1 point, and then we pulled back. So it's good about halfway through. So this helped create a trend reversal, even though we started the morning off lower. And now we're up about 59 basis points, almost at the 101 level here. Now, again, as I indicated, we do have a little bit, if you could see the lines, if you would see a line down this way, we do have room for growth. I mean, not growth, but for sideways pattern here to make it more of a breakout in either direction. But this is starting to look like a nice floor of support for us, where it could give us, not immediately, but in the interim, where we could actually see a nice spring forward, jumping up and having a nice rally here. So long term, I think bearish or it would be bullish on this, but immediately, again, this would be a little bit hard to tell. It could, always bounce down a little bit further, or it could, give us a little bit more of a break. The concerns right now is, of course, the Fed about 2 weeks ago had give indications that they could potentially be tapering off on the quantitative easing, and right now, Wall Street and all the economists are kind of viewing the current data as, will this give the data enough data for the Fed to taper off on their quantitative easing, or do you think they'll hold on? And they do have a meeting this month, later in the June, in the middle of the month, and so it will be kind of interesting to see what plays out. But it could be several months away if there's any real decisions. But Europe's still struggling, as we see. China's still slow. We really don't have any growth going on. It's almost stagnant. I mean, it's improvement where we've been in the past, but it's very, very, very minimal growth that we do show. So if anything, I think they'll hold on to it personally. Hold on to it. All right, folks. But we're getting some improvement in the pricing today on the interest rates. So hang in there. We should see some better interest rates hopefully in the near future here. All right. You guys have a wonderful day. We'll see you guys tomorrow.